Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk to you. It's been an interesting 2 weeks. Last time we spoke, we had that Fed meeting where they raised interest rates by quarter basis points, and the stock market has been weaker since then.
And in Canada, we're wondering what the Bank of Canada governor is going to do with interest rates today. So, interest rates, affecting the market, are they?
Well, I don't really think that's the cause of the drop. In fact, in the U.S., the media is actually focusing on these tariffs as the cause, but I think there's something more going on. And if you look back to mid-March, which is the other time that the Fed met before the last time, the stock market actually in the United States and all around the world for that matter pulled back fairly sharply, very quick, over like 2 weeks. Immediately after that Fed meeting, and then in April, when the quarterly earnings reports started to come out, the market rebounded and paused, and in May it went up a little bit more into the last Fed meeting. And I think we're in a sort of similar situation where the market is pulling back, and we're probably going to hold support. The market is trying to hold support on the S&P on the 150-day moving average, which is 2705. I don't know if that's really going to hold, but the next level, which I think is more important, is 2,665. The Dow is basically the February, March, and May low, 23,500 or 23,500. So I think we're probably going to those levels, and then probably have some sort of rebound in July when the earnings start to come out about mid-July. Now, what I want to say is, what are the causes of these drops? And as you mentioned, the Fed, I don't really think it's the Fed raising rates, but something else is going on in the United States, and that is much of the buying in the stock market over the years, and especially this year, has come from corporations doing stock buybacks, and we saw a record surge of this in the last quarter thanks to Donald Trump's tax cut. Corporations used over half that money to buy back their own shares, which makes the supply go off the market, helps the stocks go up. But what people don't realize is when you go into the earnings season, which we're now doing, there's a quiet period in which CEOs and insiders aren't allowed to buy or sell, but the corporations themselves aren't allowed to do stock buybacks. So that is creating a buying vacuum in the market at the moment. And the last time this happened, which is immediately after the last Fed meeting, the market dropped because the buybacks weren't there. So my assertion is the same thing is going on. There's a simple lack of demand, buying demand in the market that's causing weakness at the moment. So I think that's the story behind what's happening, and people shouldn't be too concerned this week. However, if later in the year we break these support levels, like say on the Dow, the March, February low, and if we test that and bounce again, and then if we later break it in August, September, October, then I think we're really going to see real selling and a lack of confidence begin in the financial markets. You could point to a couple reasons why they might lose confidence. It might be these tariff situations become more chaotic. Yesterday, Trump was tweeting that he would like to tax Harley-Davidson and basically destroy it.
Do you think people who ride Harley-Davidsons were pro-Trump, and will they continue to be pro-Trump? What has his latest actions told you on that front?
Well, that's strange. I'm not really sure. I saw a survey. They actually polled the Harley-Davidson workers, and they said that they support Donald Trump, which over the dispute with Harley, which on face of it seems sort of bizarre because you would think if he's going to destroy Harley or tax them to death, they're going to lose their jobs, but they may just be thinking, some of these guys, that, well, we're going to lose our jobs anyway if Harley moves some production to Europe, so let's just destroy the whole company. It's kind of bizarre. I don't know. But I would say, though, that as long as the stock market for American investors, as long as these support levels hold, and they are holding, I think most people will remain confident. The political opinions have kind of hardened. People are pro-Trump or against Trump or just kind of disgusted with the whole thing, which is really the majority of people. But I don't think you're going to see much change in opinions with the pro-Trump people or the anti-Trump people. It's more the people in the middle. And as long as the stock market's up, I think they're okay. But if the market falters, then really almost the entire country will start to really lose confidence. And if you look at Bush's poll numbers, they went into a rapid collapse. I mean, people were angry, of course, over the Iraq war, but his poll numbers were in a slow decline, but they went into a real collapse in the fall of 2008 when the stock market dropped. I'm not trying to suggest we're heading for a drop that dramatic, but any drop, I think, will hurt Trump politically if it takes the market below these support levels.
We'll have more with Mike Swanson right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with Mike Swanson. Mike, you were talking about critical support levels. What are they, and in what sectors?
Yeah, well, on the stock market, when you use technical analysis and charts, you can see places where a stock or a market tends to bottom repeatedly or top out repeatedly. And what basically happens is people will look at a chart and they'll say, well, the Dow always bottoms at 23,500, or at least it has since January, so I'll buy down there. And that provides buying support. And for the most part, most people really aren't paying attention as the average investor. They just look at their account balance. And we feel 10%. That's about where the 23,500 level is. And when people start to lose over 10% of their money, they also tend to start to worry. And if they lose 20%, that's when you really get panics. So 10% a loss from people's, account balance highs would cause people to worry, and I don't think it's a coincidence that's basically where the technical support level. But also people in hedge funds, which really dominate the market action more than individual investors, use these support levels too. They run trading algorithms and robots and look at things on a short-term basis. So speaking, that 153 moving average of 2705 in the S&P 500 closest technical support levels. So the market's been trying to hold that yesterday and today. But when these support levels fail, what happens is the robots and these technical buyers, they'll wait for the next level. So that's why that 200-day moving average and lower level 2665 I think is more critical. But when you take out all the supports, then you start to buyers step away and people sell, and it can work on itself. We're not in that situation, but I think we're in a transition that could lead to that. And one reason why is the stock market is also linked to the economic cycle, the business cycle. We've been in expansion since 2009, and if you look at the yield curve, it's starting to flatten out. That means the short-term rates and the 10-year rates are getting closer together. The spread is less than 0.35 on the rates, the 2 and 10-year bond. And when that's inverted, that means the people trading bonds think the Fed's next move down the road is going to be to lower rates. So that spread is so narrow, it's telling us all that are looking at it that, look, we're at the end of this cycle. That doesn't mean it's ending at the moment or next week, but we're closer. We're in the ninth inning, and you got to think about your investments accordingly. It's not an exact timing indicator, but it means that, you know, if we're in the ninth inning, the game's going to end, and we'll be a bear market probably before the end of the year.
Well, the robot revolution as well is going to make a difference, not just when it comes to trading, but we've already seen a major financial company in Canada lay off 700 people because it said automation is going to do those jobs.
Well, that's happening in the United States too. I've seen interesting statistics. When the market fell in January, a lot of individual investors in the United States, as a whole, were buying on that drop. They weren't selling in panic. They were buying. And what's interesting, though, is half the buying wasn't coming from people making a decision to buy, like, oh, the market's down today, I'm going to buy. Instead, they had their own automated portfolio buying systems that said when the market drops, sell some of your bonds and buy stocks. And that's how they were, buying. Or if you got cash, then put some of that into stocks. So a lot of American individual investors has gone to the trading robots themselves, the computer program, fired their investment advisor. Famously, a year ago, Warren Buffett said, you don't need an investment advisor anymore. And people, I think, took that to heart. The problem is, though, that if you're an American, and I would say Canadian for that matter too, if you're only investing in the U.S. stock market and in bonds as diversification, and you don't own gold, silver, or markets outside or commodities, just stocks and bonds, yeah, historically since 1980, that has been a good way to diversify. These trading programs show that works to cut risk and increase return. But if you were investing from 75 to 1980, that would have been a disaster. And I believe in the next down cycle, at some point in the next couple of years, we're going to see treasury bonds go down at the same time the stock market's going down. So all these people using these trading programs and think the program's taking care of it, they're going to find out that's not the case at all. The program is only as good as the strategy and data you stick into it. And when things one day change, it's going to really be something. And this kind of people will be, I don't know what will happen. It's going to be something.
We'll have more with Mike Swanson right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, oil inventories in the U.S. fell by 10 million barrels. That is a tremendous drop and not something seen for a long time. What does that tell us about the price of oil going forward?
Well, it seems like oil, we had a nice rally, and then almost around the time that oil peaked out and came down a little bit. There's also news this week that OPEC and Saudi Arabia wants to just boost their output and start, pumping their oil out. So I would say, if we think back to when there was that oil bust, when all these fracking companies began to go out of business, that was around 2015, 2014. If you can recall, Saudi oil minister at the time said he wants to see American production shrink. He wants to see American fracking companies go under. He wants to destroy them. And as you say, the supply has come off. And I would suggest that 2-3 years have gone by, and they've successfully completed their operation, and they're now taking advantage of it by pumping out more oil, while a lot of the American companies have gone bankrupt. They're out of business, and they can't just turn back on. So the Saudis are going to make money. The Americans are left behind. And sadly, we have a president that, basically is aligned American foreign policy to Saudi Arabia. So he's just kind of stuck. I don't think it's really going to change here, but, maybe some companies will come back online, but I would guess Canada is more in a position to take advantage of the higher oil prices.
Yes, but we still have to wait for a major pipeline to the ocean to be built so we can sell the oil to China and Japan and India and so on.
Oh, okay.
Yeah. So it's not stuck in the ground, it's stuck laying on top of the ground.
So everyone's just staring and waiting.
Taking a look at the tariff war between now Canada and the U.S., Canadian tariffs against U.S. steel and aluminum go into place on Canada Day. Canada very reluctant to take retaliatory action because they know the president likes to overreact to everything. What should Canada be doing? Should they be putting tariffs on? Should they ignore the actions from the White House?
Well, I think that's what the whole world is trying to figure out. And there's an interesting story, I think it was Sunday or Monday in the Wall Street Journal, where they said China doesn't know what Trump wants, and Europe doesn't know what Trump wants. So if this is a negotiating tactic of Trump's, then they don't even know where to start to try to make him let up. I suspect actually it isn't a negotiating tactic, because if you look at he pulled out of the Iran deal and said that's a negotiating tactic, and that frankly isn't. He and John Bolton, as I said, have aligned the foreign policy of the United States of Saudi Arabia and Israel too, and they want to overthrow the government of Iran. They don't want negotiations. They say they do, but they really don't. And it seems to me that if you just looked at what everything Trump does, it seems to be geared towards two groups: the people that donate to him, where the steel companies and Wilbur Ross benefit from the tariffs, and people who vote for Trump, his so-called base, which they hate Saudi Arabia. They are very supportive of Israel, so he moved the embassy and so forth. And these people in the swing states, such as Pennsylvania and Ohio, they like tariffs. They think the tariffs are a way to fight back against companies that laid them off and so forth. So what I'm trying to suggest is I don't really think Trump has a real plan or anything when it comes to these tariffs, except just do them, get the poll numbers up, and that's it. So I think in time, probably the rest of the world will make deals with each other and we'll be kind of left out. You see that happening with China reaching to Europe and vice versa. Germany is actually low-level talks with Russia, and probably the same thing will happen to Canada. And probably the U.S. will end up being the loser in the end. But the bad thing though is, one overall effect of all these trade wars is that it's going to shrink global trade. So it's going to have a negative effect on everybody.
The U.S. has asked its allies to cut its use of Iranian oil to zero. Looking at how they're being treated, do you think they'll go along with that request?
I don't know. It's hard to keep up with what all these individual countries are doing. And a tough thing is it's going to take time to see, because what we haven't seen yet is a country do what Trump wants and get rewarded. And until that happens, I don't, even North Korea hasn't been that rewarded yet. They haven't. It's like a photo op thing going on there. But outside of that, it doesn't seem like anything's happening. But I think we're just in a strange, like, summer period where the stock market's above these support levels. We have had a nice bull market for years, and we're at the peak of an economic expansion. And I think back to the last two cycles, and in the internet cycle, there was a mania in the United States over internet stocks, believing the internet is a new paradigm that's going to change everything, and then everything, of course, went bust. And the real estate, a lot of people believe that was going to go up forever and make the stock market go up forever. And now there are a lot of people that are fully invested in the stock market and just think, like, there's a big plan that Trump has to keep the economy growing, in a sustainable way, and do these trade things to the benefit of everybody, and just has like a secret plan that only he knows about. And you just got to believe it. But I think we're going to see if that's true or not over the rest of this year.
Mike, thank you so much for chatting with us.
Thank you. Good to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet, our YouTube channel, Talk Digital Network. Questions for the show or our guests, like Mike, can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.